Ladies and gentlemen, welcome back to the channel. AMC stock is down about 5.5% today. A pretty rough day overall on Wall Street. Even though bond yields are falling, deflation is coming, and this is, well, your holiday season disaster. We're going to go ahead and get into what is coming next for our markets, what the situation currently looks like for AMC stock, what we can expect for tomorrow as well, because we do have some economic data that could be a little bit more important this time around. Let's go ahead and get into all of this information. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys would like to come trade with us live in real time, link down below in the description of this video. So, first things first, let's jump into it, guys. Like I said, AMC stock is down about 5.5% here today at $7.45 per share. This situation could be a lot better, but indeed it is not. Bond yields are falling today. 10-year treasury yields down about 10 basis points. Woohoo! Holy smokers! And stocks are not doing great. This is because Walmart, deflation is here. It's coming. They say, quote, inflation has also waned, and for some categories, deflation has taken hold, a trend that could help Walmart shoppers but hurt the company's sales. Prices for dairy, eggs, chicken, and seafood have fallen, CEO Doug McMillon said on the company's earnings call. He added that relief is coming for customers as they look for holiday gifts. If there's anyone that knows what's coming next, it is freaking Walmart. There's no other company that has a better insight than Walmart. In the US, we may be managing through a period of deflation in the coming months to come, and while that would put more unit pressure on us, we welcome it because it's better for our customers, he said. Deflation is really bad news. Deflation causes recessions, causes layoffs, causes more deflation, causes recessions, causes layoff, causes more deflation. That's the cycle of how these things work. Imagine it like this. If you can buy a new product cheaper, that's great. But if that new product is cheaper, odds are someone is getting laid off on the back end of them, and then they can't buy the products, and then it's just a continuous loop of layoffs, deflation, layoffs, deflation, then recession. So not good. And when you're in deflation, it's pretty hard to get out of deflation. So inflation's actually better than deflation. Walmart actually beat across the board with revenue of $160.80 billion versus $159.72 billion, which was expected. Earnings per share at $1.53 versus $1.52, which was expected. So this is a little bit of good news for the average working person. Maybe things are going to get a little bit cheaper, but job security could be at risk if we do head into that infamous recession. And like I said, 10-year treasury yields are falling today. That is not exactly great news. Now, you are going to have some earnings today and after hours as well. Applied Materials, that stock is trading near an all-time high. We do have some puts on that one heading into earnings. We'll see what ultimately happens there and what happens out of the earnings call. Like I said, if you guys want to come trade with us live every time I make a trade, link down below in the description of this video. Nonetheless, Ross and Gap will also be reporting earnings. Big week this week as far as the retailers, and Walmart definitely dropped a bombshell for all of us. So that is definitely not good. Now, for the day tomorrow, what we're going to get is, well, technically overnight tonight at 2 o'clock in the morning, retail sales month over month for the month of October coming out of the UK. You're expecting around 0.2% positive. Last month, you were negative about 1%. So if this number comes in negative, that's a problem. If this number comes in better than expected, that would obviously be good news. It looks like China's not doing great. Europe's already in a recession. Most of Europe, I should say. Germany has had 2 negative quarters of GDP in a row. So they're technically in a recession already. You would want to see Europe start to do a little bit better here, and then let the US have their time to go through some of the pain of the economy. Now, tomorrow morning at 8:30 in the morning, you're going to get building permits. Now, this is normally not a big catalyst at all, but right now I think it could be a little bit more important. That's because right now, it's clear the inflation is basically only in housing at this point. If you take out housing, there's very, very little inflation basically anywhere, right? Services would be the only place left with a little bit of inflation, but a lot of the inflation is services, including housing as well, like lawn care and things of that nature. Now, there is a supply-demand dynamic that is going on with real estate that the Fed cannot fix. We're not building enough homes, so there is a chronic lack of housing out there, and that's the big reason why we still have inflation in housing. If I were to imagine all the immigration we've seen over the past couple of years, imagine all of the population growth we have seen in the last 5 or 6 decades, and we're building less houses today than basically ever before. That's a problem. That's a problem the Fed cannot fix. Now, if you get building permits that come in higher than expectations, well, maybe that means more building will be underway, and maybe that means a little bit less of that housing inflation down the line. We'll ultimately have to see. These things take some time, but that data could be encouraging tomorrow. Housing starts might also be a little bit more important coming tomorrow, 8:30 in the morning. You're expecting 1.35 million. Last month was 1.358 million, and housing starts month over month. You're expecting that at negative 1.3%. Last month, you were at positive 7% for housing starts. So you do want to see that number come in better than expected, preferably. You are also going to get some Fed speakers, Fed Barr at 8:45 a.m., Fed Collins at 8:45 a.m., and Fed Goolsbee at 9:45, Fed Daily at 10 a.m., Fed Collins at 10:15 a.m., and then some oil rig counts, and then that's basically it for the day tomorrow. So not a lot of data, but those housing starts could be a little more important. I think the big question is, are we heading into a recession? What do these other earnings say in after hours today, especially a Ross, which is really like a discount retailer for a lot of your name brand products? Do they also see weakness ahead for the consumer and for pricing? Gap as well. That one will be important. And Applied Materials for like semiconductors, they will also be a big one. You're also getting some FUD articles from the investor place again on AMC Stock. Says why AMC Stock is likely doomed to keep sinking for years. Even during a good quarter, AMC generated very little cash, forcing it to sell stock to make its required interest payments. Given AMC's intense competition from streaming and its high level of debt, that pattern is likely to continue for years, and investors should sell AMC Stock. I think there is something they're obviously missing here, right? Rates go lower. Hopefully AMC will be able to refinance to extend some of their maturities. Also, we have covered some news recently that investors are actually buying AMC debt. That's a sign of quite the opposite, that AMC might be destined for good things ahead. And we've also seen a very light film slate here recently. There just hasn't been a lot of films that have actually made their way to theaters. So hopefully that does start to change sooner rather than not. See, I think the bottom line is it's hard to make this argument when AMC is trading at around a $1.5 billion market cap, and AMC is going to have over $1 billion of cash in the bank here shortly, probably around right now. I mean, how do you make that argument, right? We'll see what ultimately happens. Things can change, things can happen, but as of right now, this holds no merit to me. Let's get into some of the numbers here today for AMC stock. So if you're looking at the interesting flow sentiment, you've seen 8 orders totaling $662,000 with a positive order value of 9%. Not exactly the greatest number, also not exactly the worst number. There's a lot of people that point out that if you're actually seeing bearish option activity on any given day, that actually could be bullish. And that's an interesting topic. Maybe we'll break down in a video, maybe later on tonight or even tomorrow. Now, if you're looking at the numbers for this Friday, I think it's really important to look at the volume today. So the volume today on the call side is 66% calls. Volume on the put side is 34%. So there's like a 2-to-1 ratio for the amount of calls relative to puts that are being bought today. And I think that puts it into a little bit more context. There are quite a few people that are still very bullish on AMC stock. And I would have expected markets would be in a much better place today, given bond yields are dropping 10%, but that is not happening because of these recession fears. Today is recession. That's what today is about. Now, short interest up free float at 10.27%, $160.32 million worth of short positions, days to cover 0.89, 20.32 million shares that are currently sold short, shares out on loan 21.88 million, cost to borrow 1.32%, utilization of 50.37%, and a short score of 61.2 out of 100. Cost to borrow fees, cost to borrow max at about 6%, cost to borrow average at 1%, cost to borrow minimum at about 1% as well. Now, if we're taking a look at what's actually happening today under the surface, take a look at this. TLT is up 1.37%. USO is down 4.62%. That is a huge move lower for oil. That is, again, your recession fears to the maximum right now. Oil falls based on recessions or if the economy is doing well. And obviously right now, it looks like things are not doing all that well for the economy, or else you would not be seeing, oil falling almost 5% today. 5% drops in oil pretty much always lead to a rough economy. At least that's what it tends to signal. So that is a big one here today. If you're looking at anything, the price of oil is insane. Now, the dollar, interestingly enough, is up 0.34%. I find that weird because if we were going into recession and the markets are expecting lower rates ahead, then why is the dollar up a third of 1% today? That doesn't make a whole lot of sense. But even considering this week, you've seen a big down move for the dollar. It doesn't surprise me if the dollar is just rebounding a little bit because it's fallen so much recently. The gold is another weird one to me. Gold is up 1.24%. Usually gold rallies during times of fear, and then once ultimately you go into recession, or it looks like you're clearly going into recession, once we get clearer data, you could tend to actually see gold perform in line with the markets, which is usually to the downside. But today is a little bit weird, just given the dollar is down so much today, screaming recession, but the dollar is up today, and gold is up today. Interesting combo that we're seeing. Now, specifically with AMC stock, the situation is very oversold, right? Very, very oversold. This dilution has got to be priced into AMC stock at this point. AMC is $7.48 per share. Trending down towards that $7.05 level. I think that is where you're going to find a lot of demand and a lot of support. If you were to fall under $7, then I think you could fall to $5 per share. That's the unfortunate thing about this. If you do fall under $7, if the markets do go through a period of weakness, yeah, you could fall to $5 per share, and that would obviously not be great. Now, if you're looking at the R side, that is at 33.78, which is already near that oversold line of 30, and your MACD is starting to curl down. That is also not the greatest sign, but overall I am expecting some support here. I do think right now is a good place to be buying AMC stock, but in the days ahead we'll get a little bit more clarity on the economy, on a recession or not. That's ultimately what the markets want to see. But still, 10-year treasury yields falling the way they are today has got to be good for stocks in the longer term essence of our markets, guys. So that is going to go ahead and do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.